Ameya, and I work in the technology sector. Of course, right now I work with an IT company. I'm based out of Germany. Have about 17 years of experience across various uh, like in-house consulting and also the integrators first point of view. And happy to share whatever I know, whatever I see from the industry, from the customers that I engage with, of course, with a caveat that whatever is possible to be shared publicly, only that much I can share. And yeah, let's see how this session unfolds for further. Thank you, Prince.
Great, thanks, Ameya. Thanks for the kind introduction. So, Ameya, as we spoke, and I think 3 or 4 quarters have passed. So, how you think when we compare it with our last discussion, how things have evolved for the sector, and we saw the results of various companies. So, in your view, where we are in the, as far as if we consider space as at investable space. So where do we are in it? Sorry, Ameya, we cannot hear you.
I lost you
Was
there
I
for a
clear with
minute.
the?
Yeah, yeah. On
I was asking
broadly,
in
I
line with
understood
our
what you were
previous
saying.
discussion. So the view which you shared at that point in time and seeing the result of these quarters, how you see things have evolved over a period of time.
Sure. Yeah, so I think on a broader level, things are moving precisely the way we discussed in the previous spaces. If you see, it all started from 2020 when the sudden demand on the hyperscalers on all other aspects actually started coming in. The demand was so much that all the big companies, large cap companies, they were literally parking projects in the quarter and the quarter after that. And the customers who were not really ready to wait for that long for their project to be taken up, they were starting to go down to the tier two and the tier three companies simply because demand was, at least created in a way that there was a sense of urgency and everybody wanted to go and transform their landscape in a shortest possible period of time. Uh, Sometime after 2021, or let's say start of the 2022, this situation started tapering off a little bit, wherein companies understood that they don't really have to be part of this, blind hamster chase, and they can actually, instead of following up where the industry is going, they can take a pause and reprioritize their spending in line with whatever was happening, especially in the Ukraine, and that basically also triggered kind of inflation across the continent, and then whatever was happening in the US economy. So it was kind of multiplier effect that came in. So companies started to reprioritize, and the situation changed sometime towards the end of 2022. That all these large cap companies, they started to urgently take on the projects that they had parked, and now the situation is totally other way around, wherein the companies are parking and deferring the projects and the execution, and that's happening primarily in the large cap space. What you see is very peculiar, and that's happening right now is kind of a it's a cycle, and we are towards the fag end of that cycle. And what happens during that is you see all these small cap and the micro caps and the small companies, mid-sized companies, they are reporting really good numbers, whereas all the large cap peers, they are not reporting as encouraging numbers as anyone would like to see, right? And the primary reason for that is the backlog filling. So what's happening is the pipeline and the booking, no matter how strong those are, the conversion rate is not that encouraging, and that's a fact. So if a conversion rate is not really good, it doesn't really matter how good your pipeline is, how good your bookings are, right? And what happens is these companies, especially the large cap companies, uh, they are kind of compromising on the margin and revenue in order to ensure that they don't lose a contract or they are part of the deal, right? Because of that, what's happening is they are getting into deals with a hope that over a period of time, let's say once they are part of the deal, after initial rollout, initial implementation, during the the template rollout or maintenance phase, they can probably cover for the margin that is lost. But in the initial period, what they're doing is in order to ensure that they stay in the race, they're outsourcing a lot of their work to the tier two and tier three, or probably even tier four companies, right? So if you see a lot of these small companies are reporting better numbers over the large cap, and you really have to understand why. At the top, the space is competitive to the teeth, and large cap companies are going to any length to compromise on margin, just like I explained. I can't take certain names because I work with those companies day in, day out. Uh, but they're going to any length to compromise on margins to retain the customer or win a contract with the hope that they can make up for the lost revenue down the line. And the most of the work that's done is from the backlog. So what I mean is, and that's big enough to keep the IT companies popping, right? But the new deal wins and the pipeline, or no matter how strong those are, the conversion rate for large cap companies is still not that rosy. Yeah. So the large players, what they are doing is they're passing through fragments of work to smaller companies. You must have already seen that happening. For example, EPAM and ELXSI, they are passing some work to smaller players, right? I know that ELXSI is passing on certain segment of work here in Germany to a company which is listed in India, Onboard Technologies. Similarly, if you see there is another company that passes on certain work to another micro cap called as KSolves, right? And now what happens is the large companies have large base, so any deviation in the margin is not really treated softly by the market. However, the small companies who have been operating of course, on a smaller base, naturally tend to report better numbers because large companies are looking to outsource in a hope of a cost saving, and this results into small companies reporting better numbers. But this is all applicable for the backlog that's currently getting executed, and the backlog size, the size of backlogs was very huge, and the backlog that we are talking about is still from that initial glutton phase of 2020 to 2021, or towards the end of 2022 probably. So that's how it is happening, and it may not be the case for future pipeline. Meaning, as an investor, you have to be really cautious of perception building around, especially around small cap companies. So the exit is important, and I still believe that probably 1 out of 10 companies really make it to the big table. So probably people are really, I see that people are playing small cap companies, but you have to look at these developments from the perspective why large cap is not able to record the standard margin guidance that they have been providing. They are not able to maintain those even 1 quarter, right? And why is that the smaller companies, on the other hand, are able to report better performance? It's not that it will continue forever, right? It's unrealistic to expect that. So I think we are towards the fag end of that cycle, and one thing is very clear that nobody knows what direction inflation or economy is headed to, right? So it all depends on, what on this, so from what lens you actually look at things. For a pessimist, it's all gloom and doom, and for an optimist, it can be all growth, right? So one thing which I see is so far the inflation is trending down, and probably if we somehow continue that trend, it would be just matter of time. You know, the companies will open up their lead on the IT spends. That's the real question to ask. And if that really doesn't happen, then it will have a direct impact on primarily on the large caps. And the micro caps, they are always in a lag to the large caps. So once this pass through and outsourcing and all the backlog processing is completed, uh, the amount of work that is getting passed through the small cap, mid cap will naturally reduce. Of course, there are certain companies they are trying to make their own space in very niche segment of the business. So those companies are of course not part of the equation, but vanilla IT services companies from the mid cap, small cap companies who are reporting stronger numbers just because of um how would I say, because of the retrofit AMC settlements, for example, there are a lot of annuity and the recurring revenue which they did not recognize for a significant period of time, and then suddenly they recognized again, and then the results look optically outstanding, right? So these kind of things do keep on happening. So I think the next quarter will again will not be very encouraging. I fully agree to that perspective. But there are certain positive developments that are also happening. So I'm kind of cautiously optimistic. Let's see where it goes.
So, Mayor, recently we heard a news order of TCS. I mean, some client of TCS cancelled the big order. So, do you see
Yes.
this trend will follow for some time across the sector, or it's company specific? Any views around this?
No, see, this is not the first time it's happening. Of course, for TCS, it's one of the rare events. But typically, what happens is I tweeted about this a couple of days ago. Typically, what happens when a large deal, which is very long tenured, let's say 8 years, 10 years, and it reaches, let's say, 50% of its implementation or a build or whatever it is that we talk about, right? So the system stability is there, the process knowledge is there. So that basically allows the customer to manage the steady state of the existing rollouts and existing implementations. And based on whatever has gone live, they can take that template and plan for the further rollouts. And what happens is instead of handing out the outsourcing work, let's say to the likes of TCS and Infosys, they tend to hire talent locally. Yeah. And that's a trend I have seen across here in Europe also. It's happening since last 2, 3 years. There are captive development centers that companies are preferring to develop. So it will happen, I think. And even though TCS says that they have recovered about 80% of the revenue possibility or revenue potential that was there from that deal, but to be very honest, it's kind of an alarming sign for all these outsourcing companies to kind of up their offerings in the value chain, because a lot of companies are preferring to have in-house consultants. They can easily track what they are doing. The outcomes are quantitative, right? Qualitative. And to be very honest with you, I worked with TCS during one of my historical engagements. I was from the customer side, and TCS was from the software integrator side. And I would like to say that there is still a lot of scope for the likes of these vanilla IT services to up the quality of the customer engagement that they are currently doing. So it's very natural what these companies are doing. So I don't think this will be the first instance. There will be more such news coming up in future.
And also, I mean, like we heard a use like calling people to join office instead of working from home. We are seeing attrition on that front. So this is across industry, or this news is specific to a company. I mean, any sense on that?
So it's happening. It's happening. It's happening almost everywhere. See, the sensible companies who have understood that work can be done from anywhere, they're sensible enough to say that, let's say, let's not go to office full time. Let's instead get into a hybrid work model. And I think that's the way to go about it, because no matter what, it's essential for you to, meet your managers, meet your colleagues, have that meet up, catch up. There are a lot of things that, takes a lot of time. For example, if you're stuck in certain issue, let's say you're a developer and you're stuck somewhere, right? uh, you have to again go and ask your senior or your colleague, hey, do you have time for a call? You wait until they're out of the call. And by then you spend 2, 3 hours and then the person is available, and then you discuss, and then it's very difficult to catch up. So what I say, for day-to-day activities, for catching up, for the socialization, I think 2 days a week is what rationally all companies who have understood and accepted that hybrid work is the way to go to retain the talent, to also ensure that the well-being and people are not unnecessarily traveling too much. So the companies are adopting that way of working. At least that's what I see. The companies who are really rational in terms of doing business. Companies who are primarily focused on the managerial aspect, that the managers, they have to really justify what managers are really doing, right? So they probably have to justify that I need people around me to ensure that they are working and I deliver, right? So these companies may definitely face some challenges retaining good talent. And I am also of the view that hybrid working is the way to go. Full 5 days back to office is probably something may work, may not work. But again, in India, given the kind of workforce and the huge size of workforce and the number of people that work in the industry, it's really difficult to, challenge the stance. But it's happening across the industry, but in specific geographies. Here in Europe, companies are not really keen to call you to office for all 5 days. They are going with the hybrid way of working, and the customers also have realized that. So, in Hindi they say, right, desi way of doing things. So most of the Indian IT companies, they have these certain desi practices, and they would like to see people back to office for different reasons than business. So these companies will definitely face some heat, I believe.
Hey, Ameya, hi,
Right.
Tanmay this side. So, see, one thing I want to ask you regarding, if I remember, Infosys in the month of January, they revised their, outlook positively, and then the April they, declare a howler kind of result. So, if I go back and think that that's three particular 3 month, few things happen in US, like some of the banking sector has gone through a bank run and all. Apart from that, let's say high interest rate or maybe fear of recession, everything were there even before the January, right? So is that the main, because they cater to the mainly 30-40% revenue comes from BFSI, the bank run triggered them to, and maybe triggered them not to get a right order books or right kind of conversion, what you mentioned few minutes back. So what is for you to, as per you, what is the things can trigger now other way around? So because if the interest rate is coming down and the fear of recession which were there is not there, do you believe that again the companies will come back and start giving a good order to them? I mean, what's your outlook in that particular point?
Yeah, absolutely. So I very briefly touched this point during the opening remarks that nobody really knows what direction this inflation and all the spending cuts. To be very honest, there are not very spending cuts. There are deferrals. That means the purchase order is there. Against that, the sale order is already created and executed by the companies. But looking at the data, the sheer data and the CPI percentage year on year that we are able to see right now, it's trending down. So if we continue doing that, and if this indeed happens, then how long the companies will keep the lead on IT spends? That's the real question to ask. And I believe in next 2 or 3 quarters, these things will really, really stabilize. And by then, we should actually see the kind of demand spend coming back. But to be very honest with you, the market was kind of used to see the demand that these companies reported during 2020 and 2021. But to be very honest, we will not go back to that kind of demand very soon.
I mean, just leading to that, just one thing I want to add up on here. So, before just 2020, the stocks, mainly the bigger names like TCS and Infosys, the kind of valuation they used to attract, and after that, the entire tailwind came in the sectors and the valuations goes sky roof. And again, these stocks corrected a bit and, almost came to around 10-15% range of the pre-COVID multiples, right? So, looking at the current valuations, as you rightly said, that 2-3 quarter probably give us some visibility. What do you think is the right strategy for anybody to come into the market and put some allocation to the IT sectors? Should they wait in the sideline and see things fold out for next 2-3 quarter, or do you believe that given the CPI is coming down and there is a no more news of bank run or such kind of negative things in US, people start coming in gradually and putting some kind of allocations into the IT big names?
Yeah, sure. So it's kind of a mix. So my first reaction is to wait on the sideline, to be very honest with you. Primarily in the large cap space, given the kind of macro uncertainties and given the kind of deferrals that we are seeing, we're not really sure whether that will actually come back to the normalcy in next 2 to 3 quarters. If it does, then I'm sure these companies will not like fly overnight, where investors will feel that okay, we have missed out the rally completely. I don't believe that will happen, given the kind of valuations we are already trading at. And in the mid and small cap space, we are already in the euphoric phase. If you look at companies, for example, likes of Nucleus, they have literally doubled in a matter of couple of weeks, right? So what I suggest is, if one has to really take position in the sector, it's probably better to take through a certain mutual fund at this moment. But again, the problem with this mutual fund and ITB is they have large allocation percentage wise to the large cap companies mainly. So instead of doing this, rather than that, let's try and find out the specialty companies over the services companies, right? And like I explained earlier, the large cap companies are right now going to any length to ensure that they're part of the ongoing deal negotiations with all these big Fortune 500 companies, and they are really willing to compromise on the margins. And if that really happens, that means we will see probably two again further quarters of soft margin reporting. And market will definitely not treat that very softly. Yeah. So instead of doing that, investors can rather try to find companies who are operating in special segments or operating in the niches, companies who are increasingly getting these outsourcing kind of work from, let's say, any of the large cap companies. Uh, in the ER&D space, for example, this is happening very frequently. Some of the companies are passing on work to the small ER&D players, so that is also happening. Then there are certain companies who offer, very specific platform or very specific kind of a service for example, likes of Rategain, let's say. So while the entire sector about hospitality and everything stays up, but of course these companies will keep on doing relatively better over the other IT companies. So I think this is how one should look at, rather than allocating to large caps or very small and micro caps. I think one should spend some time to identify if there is a value proposition, if there is a differentiation clearly visible, only then take a position. Otherwise, it's probably better to wait for a quarter or two.
Great. So, Ameya, one question is from Sherry Ram. He's asking, what's the impact of Chat GPT on Indian outsourcing companies and jobs?
I was kind of expecting that, but okay. Uh, Probably, I'll reply. I'll answer that. Elaborate fashion. Let's see. Okay. So first thing, that one out of 8 to 10 technology trends actually become reality, right? Until a year ago, we were talking about metaverse and blockchain and alternative reality, AR, VR. AR, VR at least has some application in the digital twins area, right? But from all the basket of all these technologies, the cloud is the only thing that eventually became mainstream. So similarly, if you see the AI narrative and all the thoughts around that narrative are hardly a year old. Okay, from the social media perspective, I'm talking. It's not that development have happened only a year ago. So this especially happened since the GPT was launched, right? And the LLM is basically large language models, right? So LLMs and the AI and machine learning models were there since before the GPT. But uh, it is stable diffusion that kind of triggered the curiosity, because it was usable by common folks who had no background of technology or AI, right? This is also the fundamental basis for GPT. But we are, to be very honest, and then there is another diversion where people are talking about artificial general intelligence. And then, to be very honest, we are far, far, away from achieving AGI anytime soon. But it won't harm to be super positive that AGI will make into mainstream, but the picture won't be complete without compliance and the elimination of the biases that are inherently getting built in the air. Now, every IT company is launching their generative AI service offering. You go back 2 years ago, everyone was launching cloud services and AI ML services. As an investor, you have to be really careful of such shifts. The most of the applications of generative AI and the AI service offering these IT companies are offering are focused around very handful segments. For example, marketing, sales, customer service, support, testing, and some part of the software development. I'm saying some part of the software development for a very specific reason, which I will touch base later on. And the reason I'm saying some part is because the audit and the ownership of, or the, let's say, the intellectual property aspect of the generative AI is still not in the picture, but soon it will be, right? Um, so let's break down on the technology stack basis where the LLMs come in. So the integration, APIs, processing workflows, these are some of the immediate applications that you see, right? Very few companies will prefer to build the LLMs of their own. Instead, what I foresee is existing LLMs will be leveraged, retrained in a specific domain, such as, let's say, production planning, production process, or after sales contracting, enterprise resource planning. And naturally, these companies would need an infrastructure to train the models based on their own data and based on their own context, right? So this one space is really interesting. One key thing which I track is the availability, and I'm answering in a little elaborative fashion so that not just the GPT but also the surrounding and the other aspect of the GPT and what actually will probably come into picture with GPT adoption. Those things will also probably be covered, right? So one key thing which I track along with the GPT is the availability of the GPUs for computing, which is the direct consequence of the model training adoption, right? Now you must ask, why is it important? It's important because models must be able to determine context, which directly improves the quality of the output, right? So if you see all the big hyperscalers who have all these huge, GPU computing capabilities, they usually make that available to customers so that customers can use these GPU computing, infrastructure and train their own models. But these companies are also now limiting these GPU computation capabilities to the end customer. There are certain startups who eventually came in to fill in that void, but these startups are also getting out of capacities. So this is a main bottleneck in training a large language model. Now let's look at another aspect: how this GPU computing is sold to a customer. Right now, if a customer is looking to train an LLM, usually, so it's the licensing or a deal is not pay as you consume basis. It's perpetual, right? And that's I'm talking for GPU computing perspective, not talking from the cloud services or any kind of tools that are available over the cloud. Those are pay as you consume basis. But the GPU computing capabilities, they are perpetual, meaning whenever you are not training the model, you are still paying for the computing. And it's meaningless for small companies who cannot afford to have huge technology debt, right? Then there are models that have better understanding of certain technologies. For example, Bard has a relatively better understanding on MS365 tools, despite being developed by Google. They still have better understanding on MS365 tools, but it loses context very quickly. What I mean by that is, as you start engaging with that generative AI, initially you would see the result is of very high quality and you are getting your answers absolutely spot on. But as the technicality and as the depth and the context and the meaning of your conversation and the interaction with that particular model increases, it loses context very quickly. Now, OpenAI is now integrated in many of these Microsoft 365 technologies and probably will gain better understanding once it trains on the real data. And um, one key thing to note is companies would want to build their own AI strategies, right? They don't want anybody else to come in and build the strategies for them. They want AI strategies. They want to build AI strategies themselves rather than going to any outsourcing companies. And in all this grand scheme of things, IT companies come into picture towards the fag end of the value chain. And this is why, uh, This is why the strong belief looking at the data exposure and the sensitivity aspect of the AI and the LLMs that we are currently seeing. Now, one thing that I'm seeing happening very fast is the adoption of generative AI in certain segments. Okay, for example, testing. Um, and testing is a space where there are certain companies in India who are very specialized in qualitative engineering and the testing, right? So I've seen models that are capable to write test scripts, integrate into test plan, and do all this using Azure DevOps and execute in certain applications as well, especially the ones that are built using the LLM development frameworks. I don't know how many of you must have heard about LangChain. So now, if you recall, we also very briefly referred that very few companies will prefer to build their own LLMs, and that's because there is a huge cost involved to have GPU computation capabilities. And the core aspect of that is the quality of the result, right? And that's function is called from the LLM's perspective. That function is called as the context retrieval. What I mean by that is if I'm asking a certain question to a model, it will go back into a database. It will try to put together the information that it has and generate a context and give me an output. Okay, it's something called as context retrieval, which is the main function of any large language model. Sorry, is there a question?
Hello.
Hello?
Yes, Ameya ji, I want to ask that in these unfavorable macro situations, we all know that inflation will cool down and interest rate will move going down. So that will be a best case scenario for the IT companies. But even in these uncertain macro conditions, ER&D spending have not come down. They ER&D companies have been winning large deals in this space and increasing their market share. So I want to know that does these ER&D companies have an edge over the pure vanilla companies, IT companies, and in the long term, will these ER&D companies will outpace the pure vanilla companies? That is my question.
Okay. Can we take this question after I'm done answering the previous one?
Yes, of course. He asked in between. Sorry, Amia, you can continue.
Okay. Let me just gather my thoughts where I was. Okay. So I was talking about the context retrieval of the large language models, right? Uh, what's happening is retrieval is the main function of any large language model, and any LLMs may be impacted or and maybe too slow. For example, you must have seen this news recently where Hugging Face is building its own LLM and hosting. And early developers and the adopters have forever been complaining that the retrieval and the GPU support is too low, right? And I will come to the point how exactly will this impact on the Indian IT for any IT companies, right? So now let's talk of leveraging these models with the context of customers and the IT companies. The LLMs, such as OpenAI, are very generic, right? And these have limited applications in the real business scenarios. You can ask them questions in different, certain, very specific fields, but as you get into transition from generic to specific, the applicability reduces, right? So the customers would want to retrain these models using their own data. That's very clear. For example, there may be a company offering a solution for example after sales contracting, and they do contract pricing based on various factors such as, let's say, lifetime of a product in use, whether the competition has caught up or not, and so on. Now now they know that when a machine is newly launched into a market, um, the after sales is highly margin supportive, mainly because the competition hasn't caught up on spare parts and services, and there are no alternatives to replacement parts. So companies can mark up simply on the basis of cost plus models to achieve their margins. But 3 years into the future, competition has now caught up, and there are spare parts and the services available elsewhere for the same machine. So naturally, the company would look to price their contract based on the value that they offer to the customer, and there is no clear definition of value. This definition of value has to be determined based on a lot of data that's there in the system, and this data isn't available with these generic LLMs. So if this company want to adopt, let's say, the generative AI, they have to train the LLM on their own data to ensure that this generative AI can generate contracts automatically based on the right data, right context. That will then lead to the right margin expansion and revenue increase. Now, with this context, what are the solutions available for this company now? Retraining the LLM is absolutely out of reach because of the cost. You have to hire huge team of data science and machine learning and AI scientists. It will take a long time to train these models if you start from scratch. So most of the companies they rely on the pre-trained model, which severely lack with the context and the meaning of the result. And I can say this with a very high confidence that all these generative AI solutions, which are offered by most of the Indian IT companies, fall especially in this segment. They're trying to pre-train models on a specific use case so that clients can come to them to buy these pre-trained models, so that they can fast track their adoption of the generative AI. For example, you might have already seen that LTI has Lumen, which has pre-trained model for life sciences. Infosys has Topaz, which brings together, certain 150 odd something, use cases, and the model is specifically trained on those use cases. So any company who has a specific use case can come in and, buy this model rather than training the generic LLM on their own data. Of course, what happens is these models will probably not be just lift and shift kind of a adoption. You will again have to tweak these models, pre-trained models further to ensure that it matches with whatever your use case is. So you see, in a way, I have tried to answer this question that would certainly come as to what's impact of the GPT on Indian IT companies. I believe for every job that's lost on the support or a testing or any of the edge process, at least two will be created in the entire AI value chain, provided we are flexible, right? We have to really move past our traditional boundaries of the jobs. Functional roles which require high knowledge of the on-ground business process understanding are still relatively shielded. That's my honest view. But as these models get trained over a period of time, people will certainly have to evolve and retrain themselves as well, right? And of course, we'll have to keep up the pace and learn to use this model. That's the basic one can do. If you're a developer, try to build these apps using the development frameworks, integrate the APIs, and so on. So my honest view is it's not as gloomy as or people think that the generative AI will come and completely trash the Indian IT industry and out of it's not going to happen like that. There are very specific use cases, and the large language models needs to be trained on those use cases so that the output are contextually correct. If the output of those language models are not contextually correct, it means nothing to the customer. It's nobody would want and come and adopt AGI just for the sake of it to announce that we have adopted AGI, right? It has to result into certain efficiency saving, certain cost saving, of course, right? So I think if our Indian IT companies really up the value chain and start making these specific use case, specific industry specific small sliced version of the LLMs available, which are kind of a pre-trained model that companies can come in, tweak it with their own data, their own customers' data. Of course, who knows? It really depends on who is actually, have these pre-trained models available for productive use, right? So HCL Tech also recently launched similar offerings. So what these companies are doing is they have executed, let's say, for example, Indian IT company, you can take any company. For example, HCL might have executed, let's say, 100 projects in the engineering segment, for example, and let's say in Europe. So they know a typical manufacturing and the engineering customer from Europe requires what process automation? What are the typically processes that are, digitized or transformed? So they are aware of that data. They have that data. Then, of course, it really depends whether customer is really willing to, share their transactional data and their master data sharing is out of question. So because there is a GDPR. So as you can see, they already have a data and they can then take these LLMs and retrain them using their own capacity uh, and kind of launch small industry specific pre-trained models And if that really happens and if it picks up the pace, then I think whatever revenue that you are thinking would be lost due to the generative AI, more than that will be covered in this segment. So I don't really think that generative AI is gonna impact our Indian IT industry in any manner. To be very honest, that's my honest answer to this. So I hope I answered that.
Yeah, you did, Ameya. So, Ameya, you can take Praveen's question, then we go to Kaushik and then Ramanjeet. Yeah.
Yeah. So I think question was, will ER&D companies continue to do better over the vanilla IT companies? That was the question, right?
Yeah.
But I think the ER&D companies are already doing better. I mean, that's not even a question, to be very honest. You've seen certain specific ER&D companies who have reporting better numbers, who are performing better. See, uh, first of all, comparing the IT and ER&D companies is not really a right way to go forward. ER&D has to be treated as a completely different segment with a overlap with certain IT services. In ER&D also, there are very few companies who are genuinely offering solutions. There are many companies who are in ER&D space also are offering services only, which are ER&D services, right? Which are again in the value chain are similar to what Indian IT services are doing in the services segment, right? Uh, but one thing is very clear. This cloud adoption and multi-tenancy and the ease of shifting from one cloud to another, hyperscalers, and all these kind of things have made it relatively easy for companies to come in and adopt, transform their offerings digitally, right? We talked about this at length in our previous spaces. So because of that, many small companies are also kind of going digital, ensuring that they are close to their customer. They keep on hearing what their customers are talking about them, make changes, and ensure that the cycle of frequency of that change is really shortened. So if you used to gather customer feedback, make changes in your production assembly, and then again relaunch a product again in market, and that used to take 6 months, for example, previously. Now it's probably taking less than a month, right? So this is all possible because the manufacturing and the engineering companies all are also kind of transitioning and transforming certain processes, right? Going online is not transformation. Okay, one thing which we have to be very, very, very clear about. And these engineering companies, they have realized that they cannot continue doing their businesses traditionally. They have to ensure that they have all the possible channels that reach to the customer in a uniform way, right? So the omni-channel way of doing business is what these engineering and the manufacturing companies are, automotive companies, for example, they're adopting very significantly all across the world. So I believe, yes, the ER&D companies will keep on doing better, and probably yes, but will keep on doing better than vanilla IT services as well. But then again, you cannot put all the vanilla IT services into one basket. There are large caps which are not performing for a very specific reason that we talked about. There are mid cap, small cap, micro cap which are performing for a very specific reason, which is directly linked with why large caps are not performing. And then there are these ER&D companies which are performing for a very different reasons, right?
Right, Ameya. So, Kaushik, you can go next.
Thanks, Prince. I hope I'm audible, am I? My question is basically on trying to understand one of the product company that we have it in IT service. That's MapMy India. Can I understand what's the basic difference between MapMy India or Google Maps, or what is this business is all about?
Uh, See, first of all, I think the kind of location specific and the coordinate specific data that MapMy India has access to is something probably Google doesn't have because of the policy reasons. I think that is the one that's one thing I clearly know. Because of the political reasons and of course because of the indigenous status of MapMy India, they have a lot more access and a lot better access to certain locations and the coordinate data, for example, which Google Maps probably doesn't have. But I haven't used MapMy India myself, so I cannot really comment on the usability of it. I use Google Maps very, very, very frequently. Uh, But one traction which I see is as these displays in all these big cars and the adoption of the GPS as it increases, if they are able to kind of play that segment and become a proxy of that growth, I think MapMy India should do really well. But other than that, on the technology basis, except for the nature and the kind of data access, the coordinate data access that they have, probably that is the main difference. Other than that, I'm not really well aware about any other differences. I'm sorry.
Yeah, that's fine then. Thanks for that. If possible, Prince, can I go with another question?
Yeah, please.
Yeah, hi. Thanks for that. I just wanted to understand, uh, is India most of the time we are basically into an outsourcing IT service because of our cost and because of our talent that we have it. So now currently manufacturing is coming back to India. There are a lot of small manufacturing companies who are putting up their own IT services for their R&D. Also, they are telling that we will develop the product, we will do the research, and we will create the product and give it. For example, I'm talking about all the EMS companies. If you have seen them,
Yeah.
there is small portion of IT revenues coming up over there. Is it that do you believe any chance that can India be an product oriented IT service also can have come into India? Can this kind also be thought process? Can is my thought process even right?
Yeah, I mean, it's a wish that even I have. But to be very honest, and I'll give you a very honest answer, and I don't think that will happen. For one very reason is because of this IT industry. We are, kind of trained from early on to be in, services industry. Of course, this entrepreneurship and the startups culture is kind of changing that mindset. But you know, um, See, it's not that straightforward and easy to say that India will definitely become a product-based company in certain segments. But of course, in the manufacturing and the small EMS space, we can definitely build our own technology stack, our own data stack. If you leave the IT services industry per se, if you leave that IT industry out, right? If you start looking at what technology stack that India is building, for example, you must have seen DigiYatra, DigiLocker. I think these are really great products. I used that DigiYatra when I was in Delhi last month, and these are really the products that everybody really require, right? And these products have real life use cases. So in IT services segment, I don't see we will transition anywhere. To be very honest with you, we will keep on. Will stay in the services in the entire value chain. Uh, but the product specific outlook will happen in the industries which not have been service oriented before, right? So I really think given the ONDC, India stack, Drizzle stack, the integrations with Aadhaar and the DigiLocker and DigiYatra, I think we have a really, really great stack. Also, I think for the logistic, there is NLP portal also launched certain APIs, which allows you to, integrate those APIs into your own application, wherein you will be able to estimate what route is the optimum, what is the cost associated with it, what are the service provided on a specific route, and you can really build an application around it. With these APIs which are currently available, you can go and test these APIs, and the test APIs are already available. So I think in that segment we definitely have a potential to come out as a product oriented segment or a product oriented country. But in Indian IT services per se, I think we'll remain wherever we are.
That was a great answer. Thanks for that. I'll do come back in the queue. Thanks, Prince. Thanks, Amay.
Thanks. Ramanjit, please go ahead.
Yeah, thanks. Hi, Amya. I just wanted to know your views on two, specific companies, and I'm taking those examples because both are very, very targeted to a particular industry. One is into travel and hospitality, Rategain, and the other one is KPIT, which clearly is into automotives. Uh, just want to know how do you see them? I mean, if you could actually step back, and how do you see them in terms of, is it too much of concentration, uh, given that there is a seasonality, at least in hospitality and air travels? And then you have KPIT, which is from for someone who is a layman, and I just gather opinion through listening to con calls. And what I understand is that they are kind of building their a very vital space as a system integrator. Uh,
Yeah.
don't seem to be competing with any major software developer. They kind of have found their space in that whole EV value chain and automotive vehicles. Uh, I mentioned Rategain because what I did see was that their recent acquisition seems very promising. They have projected high growth numbers, 20 plus, and very interestingly, they see that their maturity business, which might come say 6 7 years down the line, is around 30 35 plus margins. So how do you view these two businesses?
Sure. So first of all, I think you very well described what Rategain is doing. And I would like to say, even though there is a little bit of cyclicality in the travel and the hospitality sector, one thing which I like about Rategain is it's focus on the it's kind of a domestic oriented, right? And I think this is a trend that's happening now, that traveling used to be cyclical earlier, but now no matter which month you are at the airport or you're traveling somewhere, you always have challenge in finding tickets in hotel bookings. I'll give you an example. I was traveling to India in the month of May, and typically whoever lives abroad, they don't really prefer to come down during the summertime, right? And I wanted to stay over in Delhi, and it was really challenging to find a place within certain price bucket. So what I really think is, and I may be wrong here, okay, so please don't take this on a face value. But what I think is that traveling is now will become kind of an integral part of probably middle class and the upper middle class, who is able to afford to do that more often than than how it was done previously. So that's my genuine view. Uh, I haven't really studied the company further than that, because my view is RateGain is a company that is in a traveling business, but it's enabling that through a technology, right? So, and if you look at certain similar companies who have been focused on, let's say, only one industry, they have done far better than the companies who are diversified. Okay. So because of that very reason, I think both Rategain and KPIT have done, and Rategain will definitely do good, and the KPIT is doing better because they have kind of found their own niche. Their recent acquisition, they did this acquisition, right? Technica, I think, yeah, Technica. And I strongly believe I have seen the Technica's offering here in Germany in one of the exhibitions, and I believe that will definitely result into incremental deal wins for KPIT down the line, right? And the way Technica's platform enables to monetize a software-defined vehicle over its lifetime through a series of different triggers, series of different events. The KPIT is present in every segment of that. So, and the prerequisite to have that is to have the control over the very complex network of this software-defined vehicle, not only at the component level, but also at a platform level and a software level. And that's precisely what they have been doing good. They acquired Technica for that very same reason. And I think, see, we're not talking, I'm not talking from the valuations perspective, from the business perspective, they're taking all the right steps. So I think, of course, on valuation, people say that KPIT is highly expensive, but I feel it's expensive for a reason. Uh, Give couple of years for this Technica's acquisition to settle down, And I'm pretty sure this incremental deal wins that KPIT will achieve in the software-defined vehicles and the monetization of the software-defined vehicle will actually again, result into re-rating of the company. I was of the opinion earlier that the high dependence on one segment is really risky. But if you see the kind of transition that is happening in the automotive space, this race to EV, hybrid, software-defined vehicles, and different avenues of generating revenues that's opening up, which were not really there earlier. For example, seat heating, right? So there is some company, I believe BMW or Mercedes, they launched this service that you can subscribe to seat heating service only in the winter. So you really don't have to do anything. The moment winter starts, the way automatically the heating starts in houses, your seat will also start getting warm while you're driving. It probably looks ludicrous, to be very honest, from the face of it, but this is slowly opening up different avenues to generate even more revenue from this entire transition, and this SDF will definitely generate more such opportunities. So I'm bullish business wise on both the companies, and even though hospitality as a sector has a cyclicality, but the proxy to that sector probably may not really have that cyclicality is what I think.
Thanks, Amaya.
Okay,
I think
thanks.
I also had a questions regarding.
Tanmay, one
Ramanji, go ahead.
second.
Go ahead.
Ramanji, any follow-up or shall we move on to next
No,
question?
I mean, I'm glad. I mean, I already spoke about valuation. That would have been my second question. But could I squeeze in another question, or I should come back
You
in the
you
queue?
can you can
Okay,
come after Tanmay,
I
Ramanji.
would.
Tanmay,
Yeah.
go ahead,
Okay.
please.
Amaya, thanks for explaining in details about couple of companies. I also closely follow Tata Elxi. I want to understand your view on that particular company because when I saw their operating margin or in that matter net profit is higher than KPIT or LTTS. So do you know? I mean, what is the reason for their getting higher margin or able to gain that margin? So could you please explain the competitive advantage of Tata Elxi? And I would love to know that. Yeah, thanks.
Sure, sure, sure. I talked about it previously, but the one word answer for that is the delivery maturity. To be very honest with you, first of all, ELXSI is now very concentrated when it comes to the service offerings. It's not as diverse as LTTS is. But that was not always the case. ELXSI initially they tried a lot of different segments. They had this special effects segment, they had VFX. In media also they closed down certain services which were not really revenue accretive. So they had certain diversification in their product portfolio, which they over a period of time they realized this is not working. This is not what we really like to do. Let's close this off. So they have come to us, they have achieved that delivery maturity. And what is delivery maturity? That means they are able to drive more revenue uh, from people located at offshore, right? So typically in the ER&D space, when you are really new, you are not aware of the domain, you're not aware of the process, and what typically customer from a specific segment always asks for. You don't have any reusable, artifacts that are currently built from the previous experiences or the previous implementations. In such situations, you are forced to send people and base them out of the customer's location for a prolonged duration of time. And naturally, the cost aspect of that is something comes back and hits your margins. That is the precise reason why LTTS is not able to clock the margin in the 30% plus band as ELXSI is able to do that now. But it was not the case always. They have evolved over a period of time. Yeah. And I also think over a period of time, LTTS will probably also realize this and they will also focus. And they are already doing that. They have decided from the diversified product offering, they'll now focus only on the six areas. But the ELXSI has already achieved that. LTTS may or may not achieve that down the line. It's up to future, but ELXSI has already achieved that, and that delivery maturity is something that is helping them to clock 30% plus margins, and that's the straightforward answer to that.
Got it, Amaya. But there is a huge gap between both the companies from a multiple perspective. So, are you convinced, or the positive thing about you spoke about Tata Elxi is justifying that gap in the value? What's your take on that valuations gap between both the companies?
See, naturally, there is always definitely a certain percentage of euphoria that is always baked in the price. But if you have a company that is constantly able to generate 30% plus margins with hardly any deviations from, like, let's say 7 or 8 or 10 quarters, I believe, then that's a very good consistency. And of course, I'm not justifying 100 plus P, but then again, you don't find companies in this space generating 30% plus margin also able to create a very highly specific, position in the entire value chain that they are offering. In fact, ELXSI has now transitioned into a company who is able to outsource certain part to the smaller ER&D companies, for example, like Convert. So of course, it will continue to trade at a premium. That's what I say. I'm not justifying that it should trade at 100. But then again, if a company is generating 30% quarter on quarter, why should it come down and trade at multiple of 30 or 40, I believe?
Thanks, Amaya. It's well explained. Thanks a lot.
Yeah, Ramanjit, you can go next.
Yeah, Amya, again, this is something, I just want to understand how the things are shaping up in the 5G player. And I'm here talking about Tejas network because from what I see is that, the BSNL deal has given them a kind of a playground to kind of, test or see where they can go. And then for semiconductors, they have this Sankhya, and of course they have this Tata, giving them a helping hand. But how do you see it actually maturing, given that it's you cannot compare it to a Cisco or some
Of
other
course.
product company?
I don't think it's even trying to become Cisco, to be very honest.
So what is it trying to do, Amir?
Yeah, sure. So, see, first of all, this deal with BSNL and TCS, this is, if you listen to what Sanjay Nayak had to say, this deal is important for them from not from the revenue perspective, but from the capability showcase perspective. What I mean by that is, when if you see Tejas has a lot of business coming from India domestic. Their revenue from the international market has steadily declined over a period of time for, of course, due to the chip shortages and the issues that they had with their EMS contracts. So because of that, they were not able to ship certain products internationally, and that's basically what resulted into international business coming down. Uh, what they are really doing is they're trying to pitch and compete in the certain product segments. For example, converging the wireless and wireline equipments, for example, right? So regardless how the telecom service provider wants to offer the services, whether it's wireless or wireline, they should be able to do that with a single piece of equipment, right? That for just for an example, that is one of the space that they're targeting. Um, then there is this DM multiplexes, right? Where they are doing this very highly specific, wherein let's not get into technicalities. What they are doing is, and let's also understand one thing very clearly is, I don't think India, from the 5G perspective, we are still in that band. We are where it's a 5G overlay on a 4G, right? We are not really launching that high band 5G services right now because we do not have the infrastructure at all. So it's a 5G overlay on a 4G, meaning if you are, if you have a phone which is a 4G, you will be able to use that. You have 5G, you will be able to use that. It's an overlay. And of course, the 5G requires a very high density of the infrastructure, the towers and the repeaters. It requires a very high density, and honestly, we do not have that. So this TCS deal is important because they will gain access to that. And another thing is they'll be able to showcase the capability that they're able to do and execute such a large kind of a contract steadily over a period of time when they come and actually starts showcasing their capabilities here in Europe, right? Um, I think a couple of quarters ago also they announced that they won one contract in Spain, one contract in Germany, and in both the cases they actually beat indigenous service providers, sorry, equipment providers, right? So I think from the value chain perspective, they're not really trying to become next Cisco, but they are working through very specific set of equipments and very specific set of offerings, which probably with help of Tatas can be then further, expanded. And one key thing that they're also trying to do is they're building these data specific services on their nodes, right? They are currently beta testing it. I don't know how many of the customers currently have access to that, uh, but they are trying to test certain software and the data services because they already have a network and a mesh of equipments which are already deployed across the geography. So it's a natural transition for them to get into a space which is highly margin accretive because hardware is not that margin accretive. The software is very highly, supportive for margins. So they're also trying to bring that aspect as well. Then this acquisition that they did with Sankhya, I mean, business case is very good, but to be very honest, we are yet to see the real impact in numbers, right? Where they basically use the line of sight band, terrestrial band that's kind of lying unused at the moment. So this chip is trying to use that band and move the video traffic over that band to decongest the 5G band, right? So that's a very highly specific offering that Shankya
तो
has.
वापस रिक्वेस्ट कैसे भेजेगा अर्जुन?
Sorry. Hello?
I request speakers to be on mute until one question is answered because that breaks the continuity. Ameya, sorry for that. Please continue with your answer. Sorry.
No, no, that's what I was saying. So 5G may basically, like I was saying, we are not launching any service in the high band or uh, high band is pure play 5G, and low band is what I talked about. It's kind of a 4G overlay, right? That's where Tejas has certain offerings, and then I was talking about Shankhanal. But anyways, like I said, of course, all these are currently stories. But I also see that they actually made a mess with their EMS contracts and the way they used to source the chips, and they were not able to um, deliver the contracts. And another challenge with the India domestic business is whenever they bid for a tender and they win a tender, that tender is at a certain price, and because of the chip unavailability, what happens is that delay further then increases cost, and the chip costs are also have gone up. So that is something was hitting them until now, but probably over a period of time that will stabilize with the help of Tata's. But I certainly don't think they're trying to become a Cisco. Cisco is as operating at a very different level in the whole network.
Okay, I got that. Thanks, Samya. So, you already mentioned that they probably won um, competing with indigenous players in Spain and Germany. Uh, I also see that there is a certain sentiment involved here because there is a push to have made in India, especially for 5G to have made in India or
Security
afternival,
reasons also.
and yeah, security regions also, and there is a China aspect to it, and to make it a kind of to showcase that yes, we can do it. But in terms of capabilities, what it has, if you could shed some light on that in terms of who are its kind of like to like competitors in India? And does it really have that, you know, the right to win?
Hmm. So of course, I mean, like to like, एकदम 100% overlap तो नहीं है, but there is service offering from Sterlite also and HFCL also, who have certain overlaps with certain product offering that Tejas has. But when it comes to specific let's say products, let's say around OTN for example, right? So OTN may I don't think HFCL manufactures anything. Please correct me if that's not true. But they have these kind of overlap in the fiber links and the MUX and DMUX switching, for example, network slicing. In all these, they have competitors. In Airtel, for example, Airtel also has a competitive offering in the network slicing. HFCL has a competitive similar offering in the fiber links. Sterlite is coming up with a similar offering, I think, in both fiber links and MUX DMUX space, I believe. But ये जो for example we talked about DWDM and we talked about the convergence of the wireless and wireline. These are the spaces where they have this product offering called as TJ 1600, I believe, which is very unique. Which is this, so in a way, if you see, see the call will get too technical to be very honest if we start discussing that, because then I will like to discuss about disaggregated servers and how you can commission that over a cloud or decommission. But it has competition, some part from Sterlite, some part from HFCL, from Airtel also. But again, in certain segment, Airtel is again their customer as well, right? So I think, as you correctly said, there is a sentiment, India sentiment, Tata sentiment, everything is there, and all these things are yet to be, seen in the numbers.
Yeah. Thanks a lot, Ameya. That really has helped me. Yeah. Um, Always great speaking with
Thanks,
you.
Ramanjit.
Thanks. Thanks, Prince.
So sorry for the noise. So Praveen ji, you had your hand raised. You can ask, and then we go for next speakers. Yeah, Praveen.
Ameya ji, I want to ask you one more question regarding the recent SWC acquisition by LTTS from its parent L&T. Do you feel it will be beneficial for LTTS ahead, as said by its management, or is it a forced acquisition for them by spending 800, 900 crores with EBITDA margins of mere 8 9%? Though they are saying that by first half of FY26, they will scale it higher back to 17 18%. Thank you.
Yeah, my view is the same. When I saw this SWC acquisition, and they I think conducted a con call also after this acquisition was announced, and I totally I'm in sync with what your thoughts are. It's a forced acquisition. I don't think it is justifiable. Spend 800 crores of outflow for a business that I think has over 400 days of DSOs, I believe. So no matter how and what kind of justifications management is providing, in my view, I'm not able to see, what is the ROI on this? When will they will recover this 800 crores, and when this acquisition will actually start contributing to the incremental revenues, adjusting for the cost and the spends, right? So yeah, it's a forced acquisition, no doubt about it.
So I want to know if this is a wrong step from its management. Will it cost very high in to LTTS in future?
Honestly, I don't know. But my honest view is SWC has, offerings in the NOC, SOC, and of course the edge data services, but it doesn't require 800 crore worth of spend, right? In on top
Yeah,
of that, this SWC is not giving them access to any new global customer. Most of the
right.
existing work is with the government, and all these are ramping down. right?
Right.
So they are saying 1,000 crore run rate. I am really doubtful of that. How it will impact, I really don't know, to be very honest. But in my view, this
Uh, uh,
is a acquisition which is very hard to be justified.
what I feel is that they have given a target of being a 1.5 billion dollar company, but I think they are getting short of that figure, so they have forced this acquisition for LTTS. Do you sense in the same way also?
See, sir, eventually after a period of time, this becomes all relative, right? So, in terms of the acquisition, all I can say is, as an investor, I did not like that, and I voted it down when voting was available. But how much it will impact, I'm not really sure about it. But this is one of the red flags for sure.
Right. Thanks, Praveen. So, Kaushik, you can quickly ask a question on 5G. Then we go to Anupam ji, Raj, and Tanmay again. Yeah, Kaushik, go ahead, please. Kaushik, you're still on mute. Okay. So, Anupam, you can go next. He'll come again.
Yeah, thank you, sir. Thank you, Ameya, for your tweets that you do. I kind of track them quite closely, and I did made some money in. There was this post up on the ERD, and I researched upon it, and it was quite a good research. One of the questions that I do wanted to ask you, you seemed quite well informed in the IT space, like like in India, like in our country nationally, and in globally also. So like what is your thought process, and if a person like me has to start, how should that process be? I know this is
Start
a very
as
broad
in
question that I'm asking.
start a
Yeah,
career
but
or
like,
something.
yeah, start as a career as an investing in IT means like researching in IT.
Oh, research in IT.
Yeah, yeah, the way that you have, like the knowledge that you have, kind of that. If I have to do that on my own, how to do that?
Thing is, most part of what I know as is kind of a professional hazard. While working in the segment, you get to know certain things, right? So that's how I came to know most of things in IT. So if you ask me, for example, as an investor, how can I start researching a chemical company, then probably I would be asking the same question. But I think there are people who have, posted some really great blogs or videos on how to research a company, how to research a segment. And as an investor, you really don't need to know it totally. All you need to know is what are the main working parts. You need to understand कब euphoria है, कब unnecessary positive sentiments है, कब unnecessary sell down है. If you understand these things, if you understand when the sector moves, what are the macro triggers that actually helps the sector move, that is more than sufficient. So one key thing I would recommend is if you really want to study a sector, you can go and watch these videos and about how to research a sector. But एक चीज है, when a when a sector is in secular uptrend, any sector for that matter, not necessarily IT or chemical or manufacturing, when a sector is in secular uptrend, most of the investors come and invest in the leaders, the existing leaders. But the most money is made on the small base companies, right? So if you, let's say, made 2x in TCS in this entire IT rally that we have had, in the small base companies, people have probably made 6x, 8x, 10x, right? So this understanding of the small base effect is also very key to compound faster. And this is something that you will learn once you go through your investment journey, make mistake and learn from it. But there is no straightforward answer to give you. Maybe you can check some of the videos that are posted by SOIC. I think they have great content. Saurabh also has done a marathon webinar on IT sector, for example, right? So I attended that. You can I think purchase that separately. I'm not again affiliated with any of these people. I'm just saying that they have been doing really great work. and you can go and watch this sector-specific seminar that Saurabh did. That's really good. Maybe that can be a good starting point for you.
Okay, thank you, sir. And another question was basically on 5G. So there are a lot of people, like a lot of countries that are opening up 5G rapidly, and they're trying to monetize it, like in Europe and everywhere. One of the questions is, how do you see what are the monetizations ways out of it? And secondly, there are like online 5G gaming companies that are coming up with it. How do you think like that? What is like the B2B model? If you have tracked that,
See,
and if not,
first
I can just have a
thing,
landscape. Yeah.
yeah, sure, sure. So first thing is, your communication layer is of very high, highly critical in the overall grand scheme of things, right? We talked about, uh, so क्या होता है कि if you go back a little, the moment you have easier access to data, reliable access to data, high speed data, you see lot of companies and lot of applications starts popping up, right? So for example, I think you're talking about EVO, right? Evolution Gaming. Um, so what happens is the 5G from that perspective is important because we now have more devices and more hardware and infrastructure coming online, willing to communicate with one another, right? So पहले जो peer to peer होता था, now that is machine to machine, machine to human, human to human. So there are many such segments that are coming up. And the adoption of 5G is more important because this machine to machine communication that we have been talking about, which is essential for product automation, process automation, IoT that we have been talking about for quite a bit of time. Uh, so these companies, so this space actually sees a further upscaling of the applications and the new services coming of age. That is one of the space where you can see once you have a very reliable communication framework, एप्लीकेशन लेयर पे काफी सारे नए नए कंपनीज बिल्डअप होके आते हैं सो इफ यू लुक एट द टेक्नोलॉजी एज अ स्टैक राइट यू मस्ट हैव आई एम नॉट श्योर whether you are from engineering background or not but you know that typically there is an application layer then there is a hardware layer there is a communication layer and so on right you must have studied TCP IP model as well if you are an engineering student so the majority of the value accrual that happens on the application layer right so HTTP is a protocol, and on that protocol, you have lot of different applications which are built in, right? And those applications is where the most money accrual, most value accrual happens. So once you have this 5G adoption coming in, you will see more factories going, digital, always connected. You see this narrowband IoT and the smart meters, for example, use cases that are coming up. All these smart meters, they operate on the narrowband IoT, right? So all these use cases do really pop up. And from the gaming perspective, sorry, don't have much understanding. I haven't studied the space that much. But I think once you have a very reliable communication layer, your application layer can see a lot of new opportunities, coming up. I hope that answers.
Thanks. Okay. So Kaushik, you can go next, and then we go to Raj.
Thanks, Prince. Thanks for the another opportunity. I just wanted to understand. You spoke about the 5G kind of things coming into India. Now, currently, we are seeing a lot of our towers have been like on 4G. We are adding up the 5G. So a lot of manufacturing is happening, and if you would have seen, there are like couple of companies who are having these projects on changing their towers to a 5G one. How do you think on what size would be the 5G as a entire thing for India, and what kind of speed level it happens, and what kind of new applications that can be developed over here?
See, as I earlier said, from whatever my understanding is, I don't work actively in the telecom space. Okay, so I'm not really an expert, but from what I understand and from studying the segment, is we are not really going on 5G. Yeah. It's a 5G which is overlay on a 4G, right? That's what primarily we are doing. It's a low band 5G that we are talking about, and it's an infrastructure shift that's happening. The BSNLD, a lot of people asked, why can't you just launch 5G? Why you have to go and upgrade your 4G network? So the infrastructure upgrade and the conversion of the wireless and wireline, I think these are the kind of mid step to get to that 5G, complete real 5G use case, because you really need a very, very high density of your towers to really have that 5G potential fully realized. And unfortunately, we don't have that. There is a really good article on Value Picker on this very specific aspect. Not sure if you have link to that. I'll try to post link to that. But there is a really good article and the good discussion on Value Picker forum where they have kind of compared really if Airtel has to go complete pure play 5G, then how many numbers of tower do we really need? So if we are really talking about, let's say, lakhs of towers, then what are the proxy to that? The Tejas is one of the direct proxies. Of course, HFCL is one of the direct proxies because tower is just one of the pieces in the entire value chain. You still have to connect a base station with a wire, right? You cannot have all these base stations connected wirelessly. We haven't really reached that level yet. You need to have these base stations connected over a fiber. And once you have that base stations connected and the density of the towers achieved, only then you will actually be able to see the potential of the real high band 5G. So rather than thinking about what really the potential of high band 5G is, we should think from the transition from what existing infrastructure to the achieving right density of these towers and the repeaters and the base station connectivity that we can have in the rural side of the India as well. So even if that happens, there will be a lot of proxies that will do really good for investors, right? So I would like to look at this entire space from that perspective, not really think about 5G right now.
Got it. Just add on to your this thing. So we have some company called as Frog Cellset who is actually currently working on replacing the towers with BSNL and Geo as well as Airtel. So do you think that replacing the towers is possible, or is it something that a small equipment in the tower will be replaced and then it will be upgraded to 5G? Is it something like that?
See, first of all, I haven't really studied frog cell sat uh, very actively, so I don't really know what exactly they are doing. So please take it with that context. Uh, but what I understand is you really don't have to replace any equipment. That's what exactly uh, offering from Sterlite. Sterlite has a certain specific. I'm not able to recall the name. Maybe I'll post. I'll just go and look and I'll post a name. So they are coming up with an equipment which will allow you to leverage your existing infrastructure and just upgrade it without really replacing it. So similar offering Tejas also has, right? Um, but what exactly this frog CellStat is doing from the technology perspective is something I'm not really aware of. So I'll have to study that to answer you.
That's fine. Thanks for that.
Thanks, Kaushik. So, Raj, you have been waiting quite since long. Please ask your
Yeah,
question.
hi. Yeah, hi, Amaya. Actually, thank you for giving us the vast perspective of the IT sector. Yeah, Amaya, currently I'm working as a software architect in the Swedish MNC in India. Actually, my question is regarding these other low-cost centers, which is coming up very, we can see it coming up very fast. Like recently in our company, the Swedish company, we lost a big one of the big project to Brazil, Sao Paulo.
Yeah,
So
yeah, I
my
get
question,
aware of it.
yeah. So yeah. So my question is that because actually we are working our counterparts in Brazil, and they are very good in the coding skill as well, and their communication is also good because we are talking in the same projects and we are talking to Swedish people, so they are good in every way. So my question is that how do you see the Indian IT sector is facing these cost competitiveness from the other local center like Brazil and other center? So this is my question. Thank you so much for giving me the opportunity to give
So
answering the
here
questions.
are two. Yeah, yeah, sure. I'm happy you asked that. So there are two things. एक है the affordability, which basically comes when you have just too much resources, right? That's what where the cost saving and the India IT model is all about. And then there is a quality aspect. If you look at it, you correctly said Brazil ek hai. I think Poland is also emerging as a very strong player in this space. I see so many companies are building their own development centers in Poland. They're hiring Polish guys. They're able to speak very good English. Their communication is probably even better than a lot of our Indian IT counterparts. And on the qualitative aspect, they are able to deliver far better software than what people from Indian IT are doing at the moment. When it comes to certain intangible aspects, the customer engagement, the proactiveness, uh, being proactive with the issues, anticipating issues, and all these people are really good. Okay, they don't work in an Indian way, and when I say in Indian way, that means they don't really like to stretch beyond a point the way we do. But I definitely agree with you. Brazil, Israel has always been in certain cases. For example, in telecom software, if you see, Israel kind of dominates that space. Yeah. Also, majority of SAP's own product development happens in Israel. And a lot of Indian IT companies are also building onshore centers in Poland to ensure that they're able to offer services and not directly from India, but through those locations. So yeah, see, we have the sheer number of people and the resources that we have, but that's the only thing that competitively we have to offer. But on the quality aspects, I fully agree with you. Even Philippines was emerging some time ago very aggressively. You must have seen IBM was very aggressively working on shifting their some of the Indian development centers out of the country and relocate to Philippines. But the challenge that they had was the communication. They couldn't find as many resources who were able to speak, as they would want it to. The communication was a challenge there, so I think they shelved that plan. But this is, I think, nature of business. All these companies will eventually open up. See, kya hota na, sir, I'll tell you, as you might have already seen, right? When you have to offer a premium service, premium architect, you typically offer it through your local markets. And when you have a kind of a template kind of a job, जो replicate किया जा सकता है easily, that you send to offshore. That is how typically all these companies are doing at the moment. So I think this will come up, and lot of good high quality jobs are definitely up for grabs in these countries. No doubt on that. I agree.
Right, Ameya. So, Ameya, I've got few questions in the comments and one question in with Tanmay. So, how good we are on time?
Yeah, we can take other more questions. Let's say next 30 more
Okay,
minutes. No worries.
Tanmay. Okay, so Tanmay, you go first, and then I take questions from the comments.
Yeah, I just wanted to understand. For example, the AI is coming, and probably with the 5G and everything, right? So digital adoptions, lots of technological innovations will keep on coming. Are there any ways we can track? What are the emerging trends into the technological space? Any website or any blog or anybody to be followed to understand more about upcoming trends in the technological space?
Yeah, so two things which immediately comes to my mind is the publication and the subscription from NASCOM. It's free. They release these industry outlook, business outlook, and the sector outlook. Also, the trends, global trends, and how Indian IT companies or Indian technology companies are coping with it. They release I think every fortnight they release a report, and that report is free. You can subscribe for free. You don't really have to be a paying member to access that. It's available only in PDF. That is one. And another is I have subscribed to McKinsey Technology. They have a newsletter which I think comes every couple of days, and the quality of content is really, really superb. Um, of course, certain numbers that they report in their articles is something I really don't believe, because uh, they report all these like trillions dollar worth of market segment opening up and all these kind of things. But just to see where the value migration is happening when these new trends coming up, it's a great space to monitor. I was also subscribed to Deloitte, KPMG, and Boston Consulting Group's technology email. So they also have a technology service. You can go and subscribe to their mailers. But to be very honest, the quality and the frequency and the freshness of what McKinsey delivers is something very, very distinctive. I think these two things come to my mind immediately.
And that is paid, McKinsey one?
No, 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 it's free. It's all free.
Okay, thanks a lot, Ameya. Thanks a lot.
Thanks, Tanmay. So, few questions are like, are there any? Okay, this has been. So the person is asking view on Oracle USA and its subsidiary OFSS in India.
Yeah, see, the thing is, the problem is the management. They are not really keen on doing any aggressive business. And what I know from my own sources is the people who are actually sitting in the Indian subsidiary, who are really uh, are the decision maker. They have huge ESOPs and kind of dividend rolls in, and there is very lack of, there is no motivation, to be very honest, to transform, right? And that's the primary reason. There is the company is very good on books, very good fundamentally, but the business traction is missing for the very same reason. So two things may happen, and first is, I think, will has a high probability that they will delist from India, um, because I don't think Oracle would want to separate out and spin this off to sell this to someone. So probably they'll just go and delist at some point in time.
Right. Another question is like, person is asking view on Tech Mahindra given the evident and many flaws of the company. But again, can it work as a contra bet if somebody is willing to stay with it for a longer period?
Why? I mean, the question is why contra bit? I mean, see, why, as if you're a new investor, why really you have to get into the large caps at this moment? I'm not even saying get into small caps at this moment, but spend some time, try to find out what value proposition, what unique value proposition a company has. To be very honest with you, TechM has always struggling with the identity. Initially, they had the tie-up with British Telecom, and the name was changed to Mahindra British Telecom. It used to be called as MBT back then. MBT became Tech Mahindra, and then they had lot of BPO, KPO work, which they eventually over a period of time started to cut down. They had a lot of people in different, enterprise software space. They got a new CEO, but the problem is the space at the top where TechM is sitting is overly saturated, right? It doesn't make a sense to be contrary. You see, there are times when you can be a contrary and come out as a winner. One is when the sector is very bearish. It's beaten down. There are no takers. You can be a contrary, and then bet on it. But when that's not the case, why I don't see you really have to go and invest in likes of Tech. That's my personal view.
So, guys, you must be enjoying this session. I would request you to connect with us so that that gives the necessary motivation so as to bring more such learned guests on our platform. And also, this session is recorded. I'll be placing this over my YouTube channel. So, if you are yet to subscribe, please do that. So, Ameya, Madhusudan ji is asking growth prospects of Cignity Technologies. If you want to take this question.
See, to be very honest, I am invested in Cignity, so just a disclaimer. Uh, but the point is, I will also sell it at some point in time. It's not something that I'm looking to hold for a period of time. I'm invested for a very specific reason, because they have certain quality engineering services that they do for a very specific digital transformation projects, and those majority of the projects, those projects which are happening globally across various other companies, they have started to come into a phase where they are now from local ITC, they are getting into the integration and the user acceptance and all these kind of testing phases. And I got to know that Cignity is getting very active in this space. And there is also similar sentiments expressed by management that they see that because all these digital transformation projects are coming to a certain phase where Cignity has certain things to offer, they will see revenue and growth coming up. But again, initially, all these companies who had direct associations with the hyperscalers, they saw the revenue uptick, while Cignity did not see anything. Then eventually, over a period of time, when projects migrated from the initial phase to the implementation and the handover phase, the hyperscalers and the companies who operate in the hyperscalers, they are not seeing that significantly high growth. But the companies who are in the quality engineering will probably see a very good, decent growth. I'm just playing this shift. As soon as I see that this is getting over, I will come out of the stock. So that's the only view I have.
Right, great. So Anupam is asking view on VFX theme in India, some best companies to track, and is there really exponential growth in that sector?
Sorry, I'm not capable to answer that. It's not my domain. But I kept on reading about this phantom VFX, and there is a lot of social media noise about it. But other than that, I really don't have technical capabilities to answer that.
And Ameya, Tata Communication is the talk of the town. So anything brewing up which is making the prospects of the company good, or it's all hype? Any view? Of course, no buy sell recommendation.
No, see, the Tata Com is, to be very honest, they are really transitioning from certain their traditional revenue segments into new business segments. Um, so I would say that there is definitely a change there. Uh, the way Tejas, Tata Communication, Nelco, for example, all these are pieces into a larger picture which Tatas are trying to build, right? So all these individual companies have a very specific role to play. It's like they are trying to capture the entire value chain, right? So they have satellite communication through Nelco, they have other communication through Tatacom, and then they have equipment space also covered through Tejas. So it's like entire value chain they are trying to capture, right? I would not say there is a hype, definitely. There is a transition that is definitely happening. Uh, I wrote a thread on that. Maybe you can just read that. It's otherwise it will be just too much to go in and talk about it.
Right. So few more questions. Okay. And let me 1 second. Okay, Tata Elxi is already discussed and Cignity. Okay, so Sujirji is asking India has about 1500 GCCs. India delivers centers for engineering IT operations set up for many Fortune 500 companies with lots coming up in the future. Will these GCCs significantly impact the growth of the Indian IT service companies in the future?
See, these GCCs were there earlier also. ऐसा नहीं था कि कुछ भी नहीं था. Even Barclays, they kind of, had a huge uh, location in Pune, if you know that. Similarly, in Europe also, they have a lot of companies who are coming up with GCCs. But typically, what happens is they kind of interact and do business with the IT service providers in some or the other part of their business operations. It's not that they come in and they do everything end to end by themselves. Of course, naturally, if GCCs are coming up, that definitely means that you are losing certain part of revenue to GCC. But the companies eventually, discover ways to work with GCC. They, kind of land and expand wala strategy jo hota hai, right? So they often use that. So they get along with GCCs to build something, something very specific that is a land, and then they try to cross sell certain products, certain additional offerings that they see, hey, you have this process, you're doing this internally on your own, but why not use this product that we have, for example. So that's a cross selling opportunity. So ऐसे cases में typically the big SIs they prefer to get into land and expand kind of a strategy. But definitely there is a certain part of revenue that is always lost. Not no doubt about it.
Right. Another question in okay, so
Yeah,
okay.
go ahead, please.
So next question is he's asking about the technology and domain capabilities of persistent systems. So he's asking what are its unique or differentiated offerings that is seeing explosive demand considering they don't seem to be in traditional application maintenance and support services.
Yeah, true. So, and this was the case since the start. If you see the way Persistent built their businesses, they were not really keen on getting into let's say, for example, ERP. They were not really keen getting into ERP as such. They had very highly specialized service offerings around IP, as in they had their own IP products. And then eventually, they got involved in this development with IBM for IBM Watson, and that's basically kind of derailed them for a certain period of time, and then they again came back. So from the industry and domain perspective, I don't see there is any difference. They still serve banking, financial, insurance, healthcare, life sciences, and everything. They also have services in digital and business intelligence and product engineering, product platform, and all these kind of things. They have also certain offering in the IT infra and the customer experience and all these kind of things. They also have products in the digital banking and the credit segment, I believe, which is a complete cloud solution. So ऐसा नहीं है कि they don't have a similar offering as to other compared to other companies, but other companies usually they also have major work coming through the enterprise software space, which Persistent is not very keen on. So they work with different set of different. They work in a different ecosystem altogether. And I think they also recently acquired a company for travel and hospitality segment. I don't remember the name. They recently acquired. So in order to enhance their business consulting, domain consulting skills in the travel and hospitality, they also acquired a company very recently. So I think other than this, the key thing in Persistent is they very smartly monetize their IPs very effectively uh, towards the initial part of their journey. But the problem what with that is when you have IP led initiatives, you have to front load the cost, and revenue realization is not linear, right? So they are now slowly changing, and not slowly changing. Probably they changed that way of doing business long ago. I think before 2020 or itself, they changed that. They have a lot of frameworks, but they don't have any products as such. So I would say it's a similar company operating in a different ecosystem compared to likes of the TCS and the Infosys, which want to be present almost everywhere, right? But one thing where Persistent stands out is its extremely technologically sound fundamentals, right? I remember it when I was in that age where we used to interview with the companies to start our careers. Persistent में interview देना मतलब लोग डर जाते थे. So it used to be really difficult to crack their interviews. Programming interviews होते थे, programming case studies होती थी. सी तो काफी काफी टफ हुआ करता था, बट from the business perspective, I think it's just that it operates in a different ecosystem than the other companies.
Right. So Vivek is asking, is Ameya tracking cyber tech systems and software limited? If so, what's his views on the same?
I'm not tracking. Sorry, I don't even know what they're doing.
Okay. So last few questions. So can you once again repeat the name of weekly IT report which comes in PDF?
NASSCOM releases all these reports, so you can go to NASSCOM and create an account, and once you have an account, you can access all these reports. They release it on the website. They don't send it through email.
Right. So, I think questions are more or less done because I see many company names, Happiest Mind, eMudra, Latent View, and if we continue for another 10-15 minutes, I guess there would be more names. So, so in general, if you want to share any view on these, then it's okay. Otherwise, we can close with the closing remark for the day.
No, I don't have any specific view on Happiest Mind. On Latent View, my stance is still the same, that all the other companies that we have, for example, Infosys, TCS, they have much bigger, much mature, much wider practice on analytics than Latent View is able to, able to offer. So I don't really see why there is so much, euphoria and the kind of positive sentiments built around the company. Tomorrow, if let's say HCL decides that they want to, separate and spin off the PNP, which is a product and platform division, for example, uh, then they can create an entire company out of it. They can spin off analytics and they can create an entire company out of it. So I don't really see why there is so much out of bound positivity. I'm not saying that it's not a good company. It's run by really able promoters. I know. I listen to their con calls to understand what they are doing, what they are doing differently, how they are doing differently compared to the other people who are not even mentioning these analytics practices that they have in anywhere in the AR or the con call, because it's that common for them. But then you have a company who is doing something what the other companies are already doing, and then I don't have out of the bound positive view about the company as such. Happiest Mind, I have already discussed quite a few number of times that I am not that positive on the company as such. Um, Other than that, I think one thing I would definitely say is the kind of pessimism that is created around the sector because of the generative AI is not really what it is. You really have to understand that these generative AIs are called generative for a very specific reason, because it generates the output, right? And when you are generating the output, the context and meaning has more importance than ever. So if you have a very specific customer coming in to you with a very specific pain area, you know, let's say a retailer comes to you and tells you that, hey, I have this product category and the sales of this product category is declining over a period of time. I have this sales data, I have this point of sales data, I have this customer data with me. My aim is to increase my margin and also enhance my revenues. What can you do for me? Do you think the existing generative AI models will be able to do that? No, they will not be able to do that. You will have to retrain them. That's what I was talking about. The retraining activity of the LLMs is probably the space you should really track, right? What is the cost implication of it on the companies? Are there any pre-trained model available? Who are the companies who are launching pre-trained model in the industry for what business segments? And if there are pre-trained model in the coming up, for example, Infosys in their AR just mentioned that they have 150 pre-trained models. And you should listen to Concall and probably ask a question to them. Can you just give us some examples where you are able to deploy these models, right? For example, or do you see any traction, or do you have any productive usage of these models? If the answer is yes, then you can try to validate that through your industry network to really see if that's really is the case. If that is the case, then why will a company lose a revenue to the generative AI? Absolutely will not. See, writing a piece of code is not the entire picture. Probably it's just a tip of an iceberg. There are a lot of things that go under to ensure that you deliver a certain finally usable product to the customer, right? And even the generative code has lot of security implications, right? So nobody is really talking about all these aspects. So I would just say that एकदम सडनली किसी चीज के बारे में पॉजिटिव होना, एकदम सडन किसी चीज के बारे में निगेटिव होना, ग्लूम एंड डूम पेंट करना, दैट्स नॉट हाउ द सेक्टर गोज. Sector will continue to do good, but naturally, the large base companies may disappoint you. Small base companies have already run up, so be a little patient. Watch what companies are doing, what are the value propositions, what are the differentiating factors, and then take a call. Also think about exiting, and that's very important because uh, you have to ensure that you do not really come back on your compounding journey. If you are going up a couple of floors, ensure that you don't go to the basement. Right? At least that's very important for an investor. So I think that's the only concluding remarks. And sorry, I couldn't do this space earlier with you, Prince. I had throat issues and I'm not able to recover from it for a long period of time. But I'm better now, and hopefully we'll be able to do another space uh, after next result. But uske baad mein probably it will be difficult to do spaces for different reasons. But we'll talk about that later. But that's all the concluding remarks at the moment. Thank you so much for inviting me and listening to me.
Thank you so much, Avaya, and so generous of you, despite being bad throat, and you spared almost 2 hours, taking all the queries humbly, and I mean you explained it in great detail so that we learned the nuances of the sector. And for guys who joined late, the session is recorded as I told previously. So you can listen to this when I upload this over my YouTube channel, the link to which has already been pinned to this spaces. So I would request you to guys to have a look. And apart from Ameya, there are many other good speakers which I had in the past. So all the sessions are uploaded at one place. So everything under the sun related to market, I am proud to say that that's a very rich content from different people who are related to capital market for over decades. So have a look, and if it reckons with your I mean flavor of the market, do subscribe and appreciate our work. So thanks, Ameya, and look forward to our next association after quarterly results. So thank you so much once again. And Tanmay, anything you have to say on
Yeah, I
your
mean,
part?
thanks, Prince, for giving me the opportunity to co-host. Amaya, you are a great, knowledgeable guy. Kudos to Prince that bringing people like you in this space, which definitely going to be enriching for all the listeners. And personally, I also learned a lot from you today. And thanks for coming in and sharing your wisdom and knowledge on this space. Thanks a lot.
Thank you so much, Tanmay, for having me. Thank you.
Thanks, man. And for few of our attendees whose questions I might have missed because they were simply company names. So obviously we are not here to sell anything or push anything. So the discussion was purely educational. Please take that as a starting point and do not act on the names being say if we are positive any point in time we may change our stance owing to different changes in the companies, right? So it would be wise on your part to act smart and just learn from here and take your decisions accordingly, because simply investing on names will end up badly for you and you will lose your hard earned money. So please be cognizant of that. And with that note, I thank each and every one of you who ask great questions to Ameya, and keep coming to our spaces. Surely it will be a great value addition to everyone around. Thank you so much. Good night.